Hi guys, October 2024 agenda for Laptop Trader. We're going to cover our monthly market review quickly. I want to give a reminder of the basics of the four stages of any investment. I've had some questions on that recently. Should I trade stocks or invest in an index fund? Several examples of stocks in different stages. When should I buy or sell my positions? And should I trade using options, which I have a concrete example of that. And this presentation will be about 35 slides, so probably 30 to 40 minutes on this for this month. Anyway, hi, this is Phil again at the Laptop Trader channel on YouTube. Welcome back to our community. I am here to share my experience and give back to the stock investing and trading community one video at a time. This video series is going to cover market cycles, stocks, and ETFs, technical analysis, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. Good luck. My email contact is laptoptraderphil@gmail.com if you have any questions. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself, then invest in the markets. So this is just some reminder slides about the four market stages of pricing over time. And the green line is just an overlay line of market prices as an average. And as we look left to right, we can see stage one, stage two uptrend, stage three, the plateau stage, and stage four downtrend, and then stage one again. These are some different names for the four stages, including consolidation, accumulation, greed, fear, distribution, plateau. But at the end of the day, there's only three price trends within these market stages, okay? There's sideways trends, uptrends, and downtrends. All can be seen on stock price charts. When we put another picture to it and we define where are the opportunities in the markets, in other words, where to buy and sell. So you can see left, there's usually accumulating taking place in stage one, or buying. Stage two, there's also increased buying and holding for gains and dividends. And then we have stage three, which is the plateau stage, where many investors will sell for profit, sell covered calls or credit spreads. And then stage four, many investors make money when stocks go down by selling short or buying put options. And then stage one occurs again. So this is a slide I made a while back about what is a price pattern within a stage. So I'll leave this up here for maybe 10 or 15 seconds. You guys can take the time to read through that. But when we talk about price patterns, any patterns can break up or down. And so risk management will be your key to success when it comes to reading price charts and taking action on those patterns. Again, this is another repetitive slide that I've used before. It's just a reminder of just some basic price patterns that you'll see over time if you study it enough. And yeah, if you want to read through that. Basically, the green arrow would kind of be the buy point if you were to go long or buy a stock expecting prices to go up. Okay. So let's just review our market charts for the month. I'm going to use this weekly chart, and clearly this index or ETF symbol SPY. It's an ETF for the S&P 500, which tracks the S&P 500 index of the top 500 stocks. So you can clearly see it's in an uptrend, and to the right would be the most recent pricing information. So here, this little half circle like that indicates a new high. So we just made a new high this week in the S&P 500. So that's obviously bullish, or we're expecting prices to continue higher. Very similar story in the NASDAQ index, which we use the QQQ ETF, or the Qs as it's called or referred to. Qs did not make a new high this week, but the new high was back here in July of this year. And we had a retracement, came back up, retraced, and now it's starting to creep back up. It looks like the NASDAQ is poised, or what I would expect, to continue higher at this point. But we'll see if that happens. But S&P 500 is higher. I would expect the NASDAQ to follow. As far as the Dow index goes, we use this ETF DIA, sometimes referred to as the diamonds, to track that index. And this purple line here indicates an area of resistance. And in September, we broke through that resistance and have held above that resistance for the last 5 weeks. And we've just made a new high in the diamonds, or the Dow. So that is also quite bullish going forward. Now the Russell 2000 index, which tracks over 2,000 companies, which is way more diversified, way more broad-based, we use the ETF IWM as a tracking stock for that. So this stock had quite a wide range back here this year. And then at the end of 2023, prices moved up sharply. And then they've just kind of been back and forth here until sometime in July. In July, we had this significant breakout in price above this red resistance line. And then end of July, August, we did have a sell-off, but not down to test these lows. We actually made a higher low. And then since then, prices have kind of been moving tighter and tighter and consolidating more towards the highs. When that happens, I expect prices to continue higher. It's like pressure. You can just see the pressure pushing prices higher, versus back here, the pressure was pushing prices lower. So to me, this chart looks also quite bullish, even though it's not as strong as the other ones. But that is a good sign for the overall market and for stock investors in general, just based on that chart. Okay. Why is this all important? This is all important because in general, stocks will follow the leaders or follow the market up or down. And with the 4 major indexes all having a bias or an expectation of going higher, in other words, all these indexes to me seem anywhere from quite bullish to somewhat bullish. I expect higher prices in general on stocks. Okay. Now, when we blow up that picture of the IWM, I see a pattern to the right. If you look back at my cheap drawing of price patterns, that's the pattern I see, that little squiggly line I drew there to the left. We've had a long period of back and forth in this index. We're now consolidating towards the highs. We're still in a bit of a range, but it's a higher range, which is tighter, and it's a tighter range. We had a failed breakout where that arrow is pointing to on the right by that large red bar. But to me, this overall chart looks bullish. So that's just something I wanted to highlight for you guys. But these patterns do happen, whether it's a range pattern or a breakout pattern or a consolidation pattern. So when should I buy or sell, right? This is the big question. And a lot of that is going to depend on you. How much time are you willing to commit to studying and training your brain to see individual stocks? So you have to do your homework using either technical and or fundamental or quantitative analysis. The choice is yours. I've talked in previous videos about the differences between those three. I rely on technical analysis, technical charts, technical analysis, and some fundamental basics, such as, is the company I'm looking to buy or sell profitable, right? That's one of my big ones I look for. Are they making money, right? Are they going to be around? Or is this a short-term trade where I really don't care? So that's one area I look at. I try to buy low and sell high and or use options in my trading. So if you're not willing to develop a strategy for yourself and take the time to test and implement that strategy, then I would simply diversify for the long term in good stock index funds and or growth mutual funds, like an S&P 500 fund. Okay? Buying and holding a basket of stocks in an index is the cure for investing and trading ignorance. In other words, you don't really need to know much. If you simply buy the S&P 500 long term, that index is up over the long term and should continue in the future. My strategy is based on everything I have shared with you in this video series, such as stages, trend, price, patterns, etc., and my experience. So let's take a look at a chart here of UPS, right? Large shipping company, United Parcel Service, closed this week at 134.60. Okay. On this chart, I'm simply highlighting the fact that from a year ago, this is a 1-year chart, UPS is actually lower in price now than it was a year ago. In other words, it's in a downtrend over this period of time. But can we make money from UPS? Can you make money in a stock that's still in a downtrend? I want you guys to think about that. So here's the same chart, same information. Now you can clearly see these moving averages. There's a blue moving average and a green one. One's just a shorter term average, and I think the green line is a longer term moving average. Okay, doesn't really mean much, but that's what's on the chart. Now I got rid of the trend line, okay, that red trend line, and I put in just a couple of highlighted areas here in purple. So here, I would consider this area of pivot support, okay? There's also a green line here that indicates some support areas too, like right here. Right here is an area of support, and then it broke the green line, created this area of support over about a month's time, broke out and failed on earnings. So here's the earnings event after this breakout. So stock was sideways, stock was bought up into earnings and then kind of crashed, actually gapped down, right? And made a new low at this point. Since that time, the stock has basically been sideways for a couple of months. And it's definitely formed an area of support in this area, slightly lower than this area. So I asked myself, is this a bottom for UPS? Is this the low point in this downturn for UPS? I think it may be, okay? So that's the basis for this upcoming trade I'm going to share with you. And this is just the same chart without any of my markings. Exact same chart. The only thing on there would be that green line that's I thought was support, which was, broken. And now we've got a new area of support on the bottom. So is this the bottom in UPS? My theory is that it either is the bottom or it's pretty close. Okay. So I took a UPS options position using a long leaps call or a deep in the money call instead of purchasing 100 shares of stocks. This is a strategy. So I buy one call about a year out and sell calls further out of the money against my position for premium or cash credits. You must have evidence to think the stock is going up or will be going up. So this is a bullish strategy. It's based on the fact that I'm positive or bullish on UPS in the future over the next year. Okay? So what did I do? I bought one contract. I bought a June 20th, 2025 expiration. In other words, next June. My contract is good until next June. I bought the 115 call, which is deep in the money, right? So if UPS closed above 136 this week, I'm buying a call that's way below that. So there's some value to that call. It cost me $1,950. That's my risk, which represents 100 shares of UPS at 115. At the time I purchased this call, 100 shares would have cost over $13,000, right? Over $130 per share times 100 shares would have cost $13,000. So right away, I've reduced my risk from over $13,000 to $1,950 to control or own the same amount of shares. My broker allows me to sell calls against this position, just as if I did own 100 shares. The name of this strategy is called a poor man's covered call or a synthetic covered call. Okay, this allows me to control 100 shares of UPS for a fraction of what it would cost for me to buy 100 shares. So on September 5th, I bought that call for a cost of $1,950. On the same day, at the same time, I sold one September 27th of this year, a 133 call. And I received $1 credit per share. So options are traded in hundreds, so 100 times $1 is $100 credit. Okay, that's what I received for agreeing to limit my gain to $133. This immediate credit of just over 5% of my investment for only 22 days of risk. So selling that credit, I recovered 5% of my investment right away. And that call expires from that date in 22 days. Okay, so not a bad return for 22 days of risk. Okay, now going out on the calendar here. Okay, so on September 24th, I bought to close that 133 September call. And at the same time, I sold to open an October 18th 134 call, which then I received an additional $98 credit. We take the first credit that I sold for $100 plus a $98 credit that I received on September 24th. I now have made $198 off of my $1,950 investment, which equals just over 10% in about 45 days' time. So not too bad, right? Some investors look to make 10, 12% over a whole year. I was able to do it so far in 45 days. Then between 9/25 or September 25th and September 30th this year, the stock spikes up in price on news to over $136. My broker accounting is showing me with a loss on the call that I sold short because my short call is 133. It's accounting, but I decided to adjust a few days later to protect my long option investment. So I made an adjustment because I didn't want my call sold out from under me, which your broker can do. So over 134, um, the market can essentially say that now your option is worth so much that we're going to take it away from you. Now they would have to pay me to do that, but I wanted to protect my long call. I want to hold on to that investment until next year. Okay. So on October 4th, I initiated a complex option, which would accomplish the goal of rolling up and out in time and protecting my long UPS call at 115. So here's what I did. I bought to close the October 18th 134 call. I sold to open the October 25th 140 call for a credit. And at the same time, I sold for a credit my 115 call because it appreciated in value and delta, which I'm not going to have really time to explain the delta, but just to understand that this call appreciated a lot in value as the stock price spiked up. And I rolled up my price. So I used the same date, but instead of a 115 call, I bought a 120 call. So I sold my 115 call, cashed out, and then I bought a 120 call, which was further out of the money and lower delta for a credit. Now my total credit for rolling this position was $363. So that was a significant credit for this trade. Now, if you want to look at the chart and put some of these numbers on the chart, you guys can do that for yourself. So maybe a picture will help you understand what I did. But when I add up the 363 plus the 198 in credits I've already received, I have now received $561 in credits in about 50 days. When we look at that as a return on investment, I've earned over 28% on a stock in a downtrend. Currently, my long call is showing a loss of 0.17%, okay, at this time, which I'm not worried about because I expect UPS to appreciate in value over the next 8 to 9 months. So we still have 8 months to go before expiration. Options can be very powerful when used correctly and strategically, using charts and knowing how they work. So I thought that was the best example, current example, real trade example I could give you guys as to how I use options. So that begs the question, should I trade or should you trade using options? Well, by using this example of UPS, I'll let you decide for yourself if it is for you. Okay, the risks are real, but so are the rewards. Not all trades are going to work. You're going to have losing trades. So you must have enough capital and approval from your broker to trade options. And you must be comfortable understanding the terminology around options and how they work. Great resources I have used. Both have excellent material on YouTube and offer free videos and paid services. These guys have real companies. SMB Capital and Master Trader with Dan Gibby. Both these guys have been very helpful to my trading career. Okay, let's look at some more charts. I want you guys to look at these next several charts, and as an exercise, just think about how you would trade them. What would you commit as far as capital to that trade? Would you go long or short or use options? What stage or trend is the chart? In my opinion, a good trader or skilled trader should be able to make money in any market or stock environment. What would be your ideal entry or exit? So these are not recommendations, just chart examples for you to think about. First, I just chose something from the healthcare industry, Pfizer, symbol PFE. It's a big company. Most of you guys would recognize that name. And so what do you guys see on this chart? How would you trade this chart? What do you see? You see an opportunity in Pfizer at this time. I'll just let it sit here for 5 or 10 seconds. You guys come up with your own conclusions. Okay, so now that you've thought about it, I'll just tell you that I actually did trade Pfizer during this period of time, and I sold an option under the $28 level, under this purple line. And I was able to profit from that because Pfizer never went below that purple line. Okay, that's what I do. How about this is another ETF that I use to track the transportation index. So this ETF and this index tracks different transportation companies or trucking companies and stuff like that. How do you guys see an opportunity to trade this chart? What would you do? Okay, let's go next. The only comment I'll make about this chart is this red line is a longer term moving average. You can see it was pointing down. Now it kind of went sideways. And these shorter term moving averages, the blue and the green line, are starting to point up. That's all I'll say about that chart. Here is a chart of a company called NuScale Power Corp, symbol SMR. When you look at this chart, do you see anything different? Is there anything that stands out to you? Would you be able to trade this chart, or do you see an opportunity on this chart? Okay, now that you've maybe looked at that, I have quite a few lines on this chart. I apologize for that. The reason they're there is because I actually took a trade on SMR. I'm still in this trade, and I took this trade looking to go long or make money from the stock price going up. So far, it's a profitable trade for me. So this is an open trade for me at this time. How about this company? Checkpoint Software, symbol CHKP. Do you see anything different about this chart versus the other charts? Do you see an opportunity here where you could have made money? So from my point of view, the charts don't get any more clear than this. This is in a clear uptrend. All three moving averages are pointing up. Price is pointing up, and we just made a new high. So on Friday, the stock just made a new high. Remember, stocks making new highs, not always, but in general, tend to keep making new highs over time. Why? Because they're desirable companies that investors want to own. This is a little bit longer view of that same company. This is a 1-year chart. Again, showing the same information, just more of it over a longer period of time. So pretty clear uptrend in Checkpoint Software. How many of you guys have even heard of Checkpoint Software? You know, it's a stock that's over $200, yet I can't think of one time I've heard of that name mentioned in the media. This is a stock of a company called Stride Inc., symbol LRN. What do you guys notice about this chart? Is there an opportunity on this chart to make some money? So just to share with you what stands out to me on this chart is the fact that, you know, this is fear. This is like, you know, stage 4 fear. It's like selling, 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 selling. This is like, get me out, right? These are investors saying, get me out. I don't care what price you get me out at, but I want out of this company at this time. Now in the future that may change, but right now this stock is definitely under selling pressure. How about Google company or Alphabet company, symbol Google, Googl? Do you notice anything different about this chart? What do you notice? Is there a trading opportunity here or an investment opportunity? So what I see on this chart is Google was in a sideways trend, went into an uptrend early this year, and somewhere during the summertime started selling off. And now it's kind of going sideways. You know, so is this an opportunity to buy Google at lower prices versus back in the summertime? You know, it could be. I don't have a clear answer, but sometimes these large companies go on sale. This could be a time that it's on sale, or you know, there's nothing definite that I see on the chart, but it's a big company, it's profitable. It could go lower, but you know, or is this a sale? That remains to be seen. I'll let you guys decide for yourselves. How about Uber? Uber had an interesting week. What do you guys think about this chart of Uber? A couple things I noticed about Uber from a chart point of view is Uber likes to, so some of these stocks have, you know, these stocks can have like what we call personalities or tendencies. So here's earnings. Look at this gap. Big gap after earnings, went sideways. And on this earnings event, we gapped down. And then here we had a sell off into earnings, gap down, and then gapped up after earnings. So most recently on Friday, we just had a big gap up and a nice closing breakout, closing new high in Uber on Friday. So that looks bullish to me, but this stock seems to gap around earnings time would be one of its tendencies to watch for. So I'll let you guys do your homework on Uber and you decide if that's a company you want to invest in. How about Hershey's Foods Corp, symbol HSY? What do you guys think about this chart? So on this chart, I would just comment that from a long-term investment point of view, okay, this chart looks horrible. It's just going sideways, up and down, back and forth. No real appreciation. In fact, it's a lower price today than it was a year ago. It is a stock that pays dividends, so that's a plus. It's a big company that makes money, so it's unlikely that it's going to zero, right? It's still a viable company. But as far as a growth story, right now I don't see that in Hershey Foods. Do I see an opportunity to trade Hershey Foods? I do. You could try, this is a stock that you could either use options to make money on, or you could try to buy the lows on this stock, because we have clear evidence of different pivot points here or areas of support in that 180 area. Okay. Right now it closed Friday at 185.98. So this is one that, in my opinion, is subject to market timing or trying to buy the lows. Okay. If you want to accumulate shares of Hershey Foods. As far as the strategy I shared with you earlier on UPS, I would not apply that type of strategy to this type of stock. I believe you would lose money at this time using a synthetic covered call on Hershey's because it just is not steady appreciation. There's other option strategies that you could use, but this one I don't think would qualify for the strategy I shared earlier. But there is a way to make money on it. Okay. And I finally want to remind you guys, most stocks, most companies follow the leader. Don't forget that. Now, some stocks will be on their own page, like Hershey, okay? But most stocks, when this S&P 500 is going up, it's appreciating like it has this year, most stocks will be following the leaders. The S&P 500 is the leaders. Same with the NASDAQ or the Qs. Most stocks within that area are going to follow the NASDAQ stocks, right? The top names in the NASDAQ are more tech related, like NVIDIA, Netflix, Microsoft, etc., tech companies. So this is more of a growth index. And when it's moving up in a strong way, most companies will follow the leaders up. And the reverse is true too. When it goes down, most companies will go down with that index. So I hope you learned something this month. And I encourage you to always keep learning and reading and trying new things. You can do it, even if you have setbacks in the short term. My personal win rate is about 55% trading stocks. So you will have losing trades. I've talked in other videos of why that is important. Check them out. I also encourage you to keep asking questions and learn from your mistakes. It's okay to ask questions and make mistakes. Remember, trade small until you get comfortable. The UPS options trade may not be for you if you don't have the experience or the account size. My first trade was a few shares of Ford around an $8 stock price. That's where I was comfortable. Okay. Good luck to you, and thanks for watching, liking, sharing, and subscribing. Phil, the Laptop Trader. See you guys next month.